Okay, welcome everyone. It's Monday, May 19th, 2025. And let's kick off with a financial fact for you. Did you know this? A recent study actually shows that despite all the economic growth we're seeing, over 70% of Indian households still prefer, traditional savings like fixed deposits and gold.
Right, over jumping into the equity market.
Exactly. It highlights, significant untapped potential there for financial market participation.
Huge potential, yeah.
Now, let's get straight to the market close numbers. As of 3:30 p.m. IST today, the Nifty 50, it closed at 24,945.45.
And that was down a bit.
Yeah, down by 74.35 points, so about 0.30%.
But the interesting story is really in the broader market, isn't it?
That's right, because the Nifty Midcap 150 closed at 21,052.70.
And that was up 92.55 points, a solid 0.44% gain.
And even better for the small caps. Nifty Small Cap 250 closed at 16,517, up a strong 111.10 points.
Which is what, 0.68%? Pretty good showing.
Absolutely. And the Nifty Total Market Index, it ended at 12,861.45, just slightly up, 0.02%.
Okay, so barely moved overall, but pockets of real strength. What about bonds and currency?
Good question. The 10-year Indian government bond yield held quite steady at 7.18%.
Stable there.
And the Indian rupee versus the U.S. dollar trading around 85.41.
Right.
So this is our 41st time bringing you this daily rundown, and today really paints that picture, a mixed market.
Definitely mixed. Sensex lower, as you mentioned, but the BSE Midcap Index gained 0.52%, and the Small Cap Index was even stronger, up 0.83%.
So clear outperformance there, which brings us to the main story, perhaps. What put pressure on the large caps? IT stocks, right?
Yes, the IT sector saw a bit of a decline, and this ties back to news from the U.S.
Moody's?
Exactly. Moody's downgraded the U.S. government's credit rating, just a notch, from the top AAA down to AA1.
Okay, and why the downgrade?
Well, they cited concerns about, high U.S. debt levels and the rising cost of actually servicing that debt.
Right, makes sense. But why does that hit our IT stocks here in India?
It's all about revenue exposure. The Nifty IT index fell about 0.8% today. And the reason is simple. A very large portion of the revenue for our big Indian IT companies comes directly from the U.S. market.
Oh, okay. So any sign of trouble or uncertainty in the U.S., even a rating change.
It makes investors a little jittery about future IT spending by U.S. companies. So, yeah, it has a direct impact.
It really shows how connected everything is globally. But while IT felt that pressure, other sectors held up quite well. Financial services, for instance.
Absolutely. The Nifty Financial Services, or FINIFTY, actually managed to climb today. It rose 0.25%, closing at 26,541.85.
Oh, interesting. So positive movement there.
And even more impressive if you look year to date. The YTD return for FINIFTY is 12.87%.
Wow, 12.87%. That really speaks to the underlying strength in that sector, doesn't it?
It certainly does. Shows real resilience right now.
Okay, so that's the sector view. Let's talk about some individual stocks making moves, especially based on their Q4 results. Delivery, for example, saw a huge jump.
A massive jump, up 13%. The big story there is they recorded a profit in the fourth quarter.
A profit turnaround. Okay, that explains the surge. Investors love seeing that shift.
Definitely. It signals a potential, positive change in their trajectory.
And another one was Divi's Lab, also positive news.
Yes, Divi's Lab climbed about 3%. They reported a strong 26% year-on-year increase in their profit after tax, their PAT, for Q4.
26% P8 growth. That's solid. No wonder the stock reacted well.
Strong earnings usually boost confidence, yeah.
And we saw some movement in auto as well, Baj Auto.
Edged up about 1%. This seems partly supported by news of a pretty substantial loan, about 5,427 crore, which is apparently helping with KTM's bailout ahead of a deadline.
Intercompany support. That can definitely influence sentiment.
It can, yeah. Positive ripple effects.
So quite a few positive stories from specific companies, but it wasn't all good news, right? Vodafone Idea faced a setback.
Unfortunately, yes. Their shares dropped around 3% today.
What happened there?
Well, reports came out that the government rejected their request for a waiver on, I think it was around $5 billion in dues.
Ouch. That's significant. So what's their next step?
They've decided to take the matter to the Supreme Court. So that adds, more uncertainty for the stock.
Yeah, a tough situation. Okay, let's circle back to those mid and small caps. We mentioned their resilience, but let's underline just how strong that trend has been.
It's really quite remarkable. The Nifty Midcap 150, just in the past month, is up 8.33%.
8% in a month.
And over the last 3 months, it's up 12.91%. Shows sustained momentum.
Wow. And the small caps.
The Nifty Small Cap 250 also highlights this trend. It's trading at a price-to-earnings, or PE ratio, of about 32.
Okay, a bit elevated maybe.
It is, which we'll come back to. But consider this. Its 5-year compound annual growth rate, CAGR, is 37.5%.
37.5% CAGR, that explains the investor interest despite the valuation.
Exactly. Huge growth potential attracting buyers.
So putting this all together, the large cap pressure, the mid-small cap strength, the sector differences, what's the overall market outlook? What should you be thinking about?
Well, the key theme, as we've discussed, is this divergence. Large caps versus the mid and small caps. And we kind of expect this trend might continue for a bit.
Okay. And the risks?
The IT sector, as we saw today, remains vulnerable to global economic news, especially out of the U.S. That rating downgrade, potential worries about spending, maybe even some foreign portfolio outflows if uncertainty persists.
Right. But financials looking steadier.
Financial services seem quite resilient. For now, yes. That's a pocket of strength.
What about other global factors? Anything else to keep an eye on?
Definitely need to be aware of broader global headwinds. Things like potential trade tensions resurfacing, maybe tariff threats like we've heard in the past from figures like Trump.
And how does that play out?
That kind of uncertainty often drives investors towards perceived safe havens like gold. So that can impact overall market sentiment too.
So a lot to track globally. And regarding the mid and small caps again, opportunity, yes, but caution needed.
Absolutely crucial. The returns have been great, fantastic even. But those valuations, like the Nifty Small Cap 250 PE of 32 and a price-to-book ratio of 3.88, they are elevated.
Yeah.
Meaning you need to be selective. Don't just buy anything in that space. Do your homework. Not every stock is a bargain at these levels.
Sound advice. Research is key.
But the overall picture, with the BSE mid-cap and small-cap indices gaining today, does suggest a generally supportive, broader economic backdrop here in India.
Okay. And which sectors seem best positioned right now, besides financials?
Well, we're seeing resilience, as mentioned, in financial services. Also, auto seems to be holding up. And defense stocks have shown strength, too.
And the ones facing headwinds?
Primarily IT, due to those global factors, and telecommunications, as we saw with Vodafone Idea's specific issues.
Got it. Okay, let's shift gears completely now. We wanted to touch upon something a bit concerning, a type of scam involving stock options, backdating.
Yes, backdating stock options. It's, well, it's a deceptive practice, unfortunately.
How does it work, basically?
Essentially, executives manipulate the grant date recorded for their stock options. They choose a date in the past, retroactively, when the company's stock price happened to be particularly low.
Ah, I see. So they lock in a lower price after the fact.
Exactly. Which means their potential profit when they exercise those options later is much higher.
And this is done at whose expense?
At the expense of the shareholders, ultimately. It boosts executive pay without genuine performance linkage tied to that specific grant timing. And it can violate securities laws and accounting rules. Raises serious ethical questions.
So for you listening, how can you spot potential red flags? What should investors look out for?
That's really important. You need to look for unusual patterns in option grants.
Like what?
Like grants happening suspiciously close to low points in the stock price. Or maybe unexplained changes in grant dates. Consistent, transparent reporting is key.
So if the timing looks just too perfect, coinciding with price dips...
That should definitely raise a question. Why was the grant dated then? Any deviation from standard, clear reporting warrants scrutiny.
Okay, definitely something to be aware of. Thanks for explaining that. Right. Let's start to wrap up today's market rundown. Key takeaways.
Sure. So the main picture today was mixed. Large caps, especially IT, felt some pressure mainly from that U.S. credit downgrade news.
But mid and small caps showed their strength again.
Absolutely. Continued resilience and outperformance there. Financial services sector looked relatively stable, which is a positive sign.
So the advice for you listening?
It's really about maintaining a balanced approach in your portfolio. Don't put all your eggs in one basket. And crucially, stay informed about these global macro developments. They can cause short-term swings,
Couldn't agree more. Staying informed really is your best tool. And hey, if you want this kind of crucial financial insight delivered daily, please do subscribe to the Finwell Daily Brief. It really helps us out.
Yeah, we appreciate the support.
And for more chats, more connections, maybe deeper dives on specific topics, feel free to reach out and connect with SOS Finwell over on LinkedIn. We'd genuinely love to hear from you.
Definitely. It's all about sharing knowledge and learning together in these markets.
Well said. And on that note of continuous learning, let's end with a quote from the great Benjamin Graham.
Ah, classic.
He said, "The investor's chief problem, and even his worst enemy, is likely to be himself. In the end, how your investments behave is much less important than how you behave."
Powerful words.
Yeah.
Focus on your own actions and reactions.
Indeed. Thank you all for tuning in to the FinWell Daily Brief. We'll catch you again next time.